Okay, officially, good morning. Happy Sunday. Welcome to the Market Watch Group Sunday Market Insights. My name is Scott. I will be your host. All right, let me get this slideshow working. There we go. Let me remind you, as always. Good morning, Greg. Good to see you. Good morning, Ray. This is for education and illustrative purposes only. Oh, how did I go back a slide? Nothing we do should be considered or construed as a recommendation to buy or sell any security or financial product. We are not brokers. We're not advisors. Yada, yada, yada. Let's get going. Well, Keith, I am extremely glad for any time we get you. I want to wish you the very best in recovery, and I hope things are going well. Sorry, I think my mouse. I keep saying it, but I don't get anything about it. My mouse is crazy. What are we doing today? Posture. Always posture. We're going to talk it through. We're going to see if, despite a little hiccup, our conditions are continuing to improve. Do the institutions see something that they like? Let's see. What does the economic calendar say? We're going to talk about the sectors. We're going to go through watch list maintenance, talk about what sectors we want to possibly continue to improve, and then we're going to move on to the next. We're almost halfway. This is the halfway point on our second pass. Third pass. So right now, if you've been with us for a little while, the thing you should understand is you could have a great trading plan. 2 passes is amazing. So if you were like a little lackadaisical about it, then I think that in that situation, we want to step it up, get ready. We're about to get to risk management. Risk management's an extremely, extremely important one, obviously. So, okay. Let's get to it. Oh no, let me make sure I reset. Okay, yeah, we're good. Posture scoring. Happy June, by the way. Time is flying. Can't believe it's June. June 1st. Last week, 2.5. And we were the same. No change last week. Huge jump from the week before. Right? We had a real steady climb from a -2.5 to a 2.5. Basically averaged 1.25 a week for 4 weeks to get a 5-point bump. And now here we are in June. All right, let's get to it. Starting at a 0.5 a point. What's it going to take for me to see an increase here? It's this consolidation, actually. Where's my drawing tools? I need drawing tools. Here we go. So, essentially, we're kind of saying we're back out of this, but we're not sure if a new trend is developing yet or not. Hi, Vladimir. Good to see you. Our thought here is we're overbought. And it could keep moving from here, obviously. But are we going to get some kind of a 3 weeks in a row, same resistance? 1, 2, 3. Is it going to pause? Right now, this is kind of in a bit of a, I would maybe even call it a pennant. It is a consolidation. When else have we seen things like this? Like over here. Doesn't have to pause for very long, and then it just continues going, right? And interestingly, that came out of this downward area. So if we're coming out of a downward area, a downward contraction, we'll call it, whether it's a correction or did we touch bear market territory, people say different things. Doesn't really matter. You see what you see. But when we come out of it and then we pause a little, is there room for us to just keep on going? Yes, we have to say yes. But it hasn't happened yet. So for me to score that, it would have to break out of the pennant. Quarter of a point. Then if I get a new higher high, another quarter of a point, and all of a sudden, just like that, I'm at a 1. And that's fairly bullish. But not today. What else might give me a score? Well, if we do have a pullback for a couple of weeks, boom, boom, 1, 2, and then it pauses, and then it moves. Well, remember, 1, 2, 3, 4, that's a month. That is a month-long process. So if that happens, that's part of the sell in May, go away summer doldrums. And ultimately, a month from now, I would raise my score. But in the meantime, the current score would prevail, and it would actually feel quite right. So that's where I am. My score stays the same. Those are the only ways I would increase it. You might be thinking, well, increase it. You might be thinking, why are you only talking about increasing it? What would make you decrease it? It would take a lot. Because anything, it could drop down even to here and then stabilize and then turn. And guess what? Low, higher low. Still a higher low. Right? So none of this would make me lower my score. My score is pretty intact. The only question is, what would make me think the buyers are even stronger now? So I find that to be in a good place. That it's really only in a position to strengthen. Other than that, we might have to watch and see it consolidate, but that's not going to lower the score. Right? I don't know. For me, useful. Okay, 6-month daily. Current score is a 1. No change last week. Kind of shot itself back up. Let's go see what we think here. Now, give me a sense. If you see it different, if you agree, let's maintain this good Sunday energy. So, what's your score? Have you changed it? What are your concerns, if you have any? That's part of what we want to do. Flag the concerns. Get the whatabouts on the table so that we can address them and say, okay, you know what? I feel like we've comprehensively assessed, evaluated the market. There we go. No change. I agree. Okay, here we go. What happened since last week? So one of the things I always like to do is just sort of draw that line. That was the end of last week. So we're sort of scoring from right there. What happened? Well, we started lower. And how much lower? Not much. And so this came down. And then what? We turned. And we're going up. Now it's pinching. So it's kind of sideways. But has it turned? Because if it turned, I'd be like, whoa, that might be a lower high. But no, it hasn't turned. If it does turn like this, well, then that's a whole different story, right? Hasn't done that yet. We don't judge what might happen. We judge what's happened. So as of right now, this is still moving higher. In fact, we finished, right? It's like this is the direction. What is this compared to the last one of these? Right? Peaks and troughs for highs and lows. Low, higher, low. What does that mean? Plus 0.25. Plus 0.25. Great. This is what's interesting about it is, it wasn't that outstanding of a week. But it was in the fact, meaning it didn't break new highs or anything, but it was in the fact that the sellers at the end of the previous week had been pushing it down. At the beginning of this week, they started the week. And then the buyers recovered. Fabulous. That's a great thing for the buyers to do, to build confidence for buyers. My score is now 1.25. Agree? Disagree? What are you seeing here, everyone? Short-term score is now a 1.25. And you might be thinking, wait, are we sure about that? Well, let's go look. Because all of a sudden, what do I have here? Oh, I seem to have a trend. Now, I want, you can see here, there's this line. If I get above that, I'm going to give it 0.25 there for the break. And then if it gets up to the higher high, 0.25 there. And we'd be at 1.75. Does that trend look like a 1.75? Absolutely. Absolutely it does. Maybe even a 2. But I'm going to just let it be the 1.75 that it is showing up as in my scoring. So there was news that it was a great month, Kareem. Absolutely right. And we are assessing it as such. We see it in our trend score. We saw it in our volume score, of course, as well. So yeah, for me, plus 0.25 is in effect now. Those are where the next two are. Now, this one, unlike the long-term score, this one absolutely has an ability to lose points. If we don't get up to that point, let me get a color change here. We'll go blue. If we don't get here, and then we do come down and confirm that as a low, boom, you lose it. It goes that fast right now. I feel like, having seen what we saw, if you remember, I'm like, we never were like a strong negative. And if you're really judging lower lows and lower highs, our score would have been like -2. And then it would have been so slow to recover, which is why we sort of break off of scoring and we move into these like plus 0.25, minus 2 point. And then once we have an established bull trend, we score it. Other than that, bear trends just don't last long enough. So I'm always just scoring the price action along the way. And it has worked much better than trying to score a downward movement and then trying to recover because of how fast we can, especially when we get, like we saw, a V. I think there was a lot to learn from here to where we are now. And I hope you feel like you've learned a lot of good things. I hope you felt like what you were doing was deliberate, purposeful, and why you did the things you did. It was very interesting to watch. And we're still in it. I don't think we're like, oh, that's it. It's over. Well, we all know this thing could flare up. We're not quite sure. And I think we would be ready to adapt. I feel pretty good about where we're at. So Moving on. Oh, nope, not FedWatch. Moving on to volume. So last week we volume surged, and remember, we always talk about this. If you're new, as markets transition, volume is like one of the big swelling pieces, right? 0.75 we got to. When it goes the other way, it'll get to minus 0.75, and then it sort of eases back to zero because we don't need volume once the trend is in place. As this moves to a point 2.75, 3.55, when we're 5 and 6 and 7, you can see here we were 4.75 and volume was negative. Here we were a 6.5 and volume was 0.25. Here we were a 7 and volume was 0.25. We don't need volume to be high once the strength is there. So that's kind of what we're hoping is that, it's like when you start an engine and you have to choke it a little bit and then you sort of ease off and then it's running on its own, right? That's what we're looking for here. It's choked a little. We're looking to see if it is ready to run full throttle. Okay, so let's score the volume then. Let's score the volume. Great. We have a great sanity check line. If you're not familiar with that, we draw a point right here at the start of this candle and right here at the end of this candle. Then we connect it. Well, that's a positive upward slope that goes right through the middle of all this. We have average volume 66.7. That volume was 68.4. No above. This one clearly was. Whoops. So let's put this here. And the third bar. This bar here? No. Average is 66.742. Let me get a calculator. I don't think it is. We got 68,445,512. What do we need it to be? 5% is all. 5%. The average on that day is 66,742,247. I'm being to the share. It's only 2.5%. Right? This is the number I'm looking for right here. That's only 2.5%. So from that is a negative Ghost Charlie. 5 has got to be 5. This one is, but here, what happened? We went from here to here. Interestingly, it was a red day, and if anything, I was considering it for the buyers, if anything, right? So if this is where we ended, and then the next day, this is where we ended, who are we giving it to? Steven, we're out of sync today, my friend. So we dropped 0.11%. 0.11. I need 0.5%. I need 0.5% to give it to somebody. What I want you to notice, so for me, anybody else want to weigh in, please? for me, this is definitely another tie. So why do I say that? I mean, look at the doji, first of all, right? So it went up a little, down a little, and finished where? Right where it started. And it started basically where it ended the day before. If it finished down here, sellers. If it even finished up here, 0.5%. We're not asking for that much. 0.5%. It needed to go up by about $2.50. No, $2.90. Somewhere around $3. If it goes $3 up or $3 down, I'd be like, the buyers did it. The sellers did it. I want you to notice something here. 2 volume days. The last buying volume day, we ended right here. Where are we? I'm going to draw a better line. Sorry. I'm going to draw a better line than that. This is where we ended. Now, we had 2 big volume days, and you'll notice that we touched that line, and we're just sitting about, I don't know, $1.50 below it. So have the buyers or the sellers done anything since this day? So Stephen, you're starting to score intraday, and that's fine, but just recognize you're changing the scoring of what it means. Right? What we score is what was accomplished. End of day. We recognize that we see that shadow down there, but what we know is that's sellers trying to, and they failed. If the sellers failed, I don't want to give them credit. Right? They failed. That's what that shadow represents. This is failure. That's what those shadows represent. What exactly, Sandy? What's happened? Absolutely nothing. In these 3 days, that's why we're calling it a hiccup, by the way, right? That's why we're saying, hey, if I have bullish trades, I'm not. If I thought the sellers were taking control, I would bail on my bullish trades. That's for sure. 100%. I'd be like, oh shit, sellers are ramping up. Let's get out of here. I don't want to have buying. I don't want to have. It's not like I think this is a astounding market. We're still at 2.5, right? And so, under these circumstances, the reason that I'm willing to stay in my trades is I think this is a hiccup. This is a new support level. The buyers are trying. They pushed it. They've paused. The buyers have definitely paused. We recognize that. For 3 days, we were like, come on, buyers. They tried, couldn't. And the last time the sellers tried and couldn't. If the sellers come in on Monday, I'm going to pretty much be done with all bullish trades that look like that, because that makes me think we hit resistance. The buyers couldn't do it. Maybe. I mean, even here, and this is a maybe. I'm starting to think about it. Even here, if we came down like this, we still didn't break support. The concept of breaking support is very important when we're thinking about a bounce trade. We talked about a very easy trading rule that says if the original reason for getting in a trade is wrong, nope. If the original reason for getting in a trade is no longer valid, get out. I have that rule for the number of times that I've had people starting to give me explanations for why they're still in a trade. I'm like, why'd you take the trade? And they give me a different answer. And I'm like, do you see it? Just because your barber's cousin's brother's sister's uncle knows somebody, they have some crazy stories as to what they heard and why they're staying, right? Versus I got in because of X. And if X is wrong, I'm getting out. because of bounce. That bounce is not wrong because the buyers have paused, but the sellers haven't done anything. Anyway, good discussion. I'm leaving mine unchanged. I added... No, am I? Let me see what I'm doing now. Buy. I've got 5 buy days. Sell. 2 sell days. Tie. 4 ties. That feels like a 0.5 to me, right? That feels like a 0.5 to me. No longer avoid the impact the tariffs are having. Well, no, they had it raised, but then put on pause for 90 days, right? I'm curious though. I'm very curious though, and I want to hear everyone weigh in on this, because they pushed this in front of Trump in a pretty abrupt, pretty in your face question. They said, what do you think about, did you guys see this? Tell me if you saw this or not. I said, what do you think about Wall Street and the new terminology they have called the taco trade? Did you guys hear that? Taco trade? And what it stands for is Trump always chickens out. Which is why they say don't worry, because he always is like, oh, I'll give him 90 more days, right? And so this is where I said we have to be so careful that now we're losing power because the bluster and the saber rattling, and I don't know, man. I'm concerned about that on a broader scale. Apparently he had never heard the term, and afterwards was pretty upset that no one had told him that's what was being said. It just feels like an emperor has no clothes kind of moment to me, right? It's concerning. But that's that's baked into our conditions. We have to be thinking about that as part of these conditions, because if it does ramp up, we know what happens. And when they pull off, we know the market has a yo-yo impact, and it can only go so long before the damage is starting to become more and more permanent. Corrine says that's why he's maybe revenge tariffing 50% on steel. Is he manipulating for? I mean, there are people looking into inside the people in how they're investing around it. So I don't know. It's crazy, crazy times. All right, let's keep moving. Next. So my volume is staying at a 0.5 at the end of the day. This is pretty good. We're at in the first half, which is 6 points total. We're at 2.25. It's solidly moving to bullishness. It's not there yet. It's got some momentum. It's got some bullishness. Let's go look at our major market analysis. I'm hopeful about what we may find in these areas here. So we now at the 200-day having shake. You can see as things come down right here, and then forward is where we saw the Dow moved into that leading position. It stayed there. And then all of a sudden, we see it transition back, and we're like, "Oh, okay. The foundation's looking a little better." Let's go now to 133, and what do we see? Same thing. It's back on top, but only the Nasdaq. Not this. So for me, if the Nasdaq is in a leading position across the board, all time frames, 0.5 is as high as it gets. We will never score at 0.75 or 1 if we don't see And remember, this is measuring appetite for risk. When the market's like, oh, I'm a little concerned, the appetite for risk is low, they put it into the Dow, to the safe havens. They park in the harbor. When conditions start to improve, we see money flow back into growth orientations like tech, the NASDAQ. What else would we look for? Small caps. The problem with small caps is they're under a different type of constraint and governance based on interest rates. And they're highly susceptible to the tariffs if they're in that business, and to interest rate environment, which is susceptible to tariffs right now. So, yeah, small caps, you can see, are still in quite the predicament. And we're unlikely to see that improve in any time soon. Let's go to 66 and see if the scoring prospect, and there it is. Absolutely. I'm going to move it. I'm going to move it to that 0.5. 1, 2, 3. What did we have? NASDAQ on top. NASDAQ on top. NASDAQ on top. I don't need the 22. The 22 is if I had a tie. I don't have a tie. I'm good. I want to see it. But you can see, though, there's that small cap weakness. That's not going to prevent the market from being bullish. It was the same as last week. For me, it's a matter of seeing the NASDAQ convincingly have that leadership position. Here, one time. Now that we've bounced, still on top after the bounce. Right? So I don't want to jump it too early, but now that I've had it on the other two. And now that I have all three convincingly with the NASDAQ, there's my 0.5. $22. And there is the NASDAQ continuing to show that surge. What else do we see that we like? Oh, look, small caps. Small caps. So you are scoring the trend with NASDAQ. Well, the scoring is based on NASDAQ in a leading position. So yes, 100%. Right? The NASDAQ has to move into a leading position and maintain a leading position in order to have that. So yeah, everything fell last week. So what I'm looking at, I don't want to get too myopic and only look at this. If we're only looking at this, we're only looking at literally like 4 days, and we're really not seeing what we were seeing, right? What I'm seeing is this surge of small caps right here, where the Dow did not. It's a microcosm, right? It's a microcosm. This doesn't score anything yet, but it's good to see that that's what we think is coming down the pipe. Does that make sense? My score is improving to a 0.5. All right. And on Friday, I said I thought there's a good chance I'll end up at a 3.25. That was the prediction I had. We'll see. It's looking pretty good so far. Where's everybody else for major market? Let me know where you're at. Are you getting bullish? Are you slower than me? Are you faster than me? Let's go see sectors. Sectors have been still neutral, right? Neutral. With what we're seeing on the NASDAQ, I can't see this not. You're slow compared to me, you're saying? Your score is lower than mine? Okay. Sector rotate, which is interesting because you're a minus 0.25 on major market, even though the NASDAQ's on top on the 200, the 133, and the 66. We're out of sync, Stephen. Out of sync. Sector rotation. What do we have? Don't overthink it. Small caps again. Here's the thing: the market has no problem being extended bullish for a year and a half without small caps participating. They're not necessary. If they do participate, they continue to add strength. If they don't, they're small caps. Right? They're small caps. They're not very big. Even if there's a lot of them. Okay, so let's talk about this. Who's on top on the 200? Discretionary growth, financials, growth, communication services, growth, industrials, growth. And then we see utilities down here. And then we see healthcare, I believe, is in there. S&P. Nope, there's technology. So of these top at the market or above, the only one that is defensive is utilities. Remember, Stephen, like I said, if the small caps are participating, it can get to a 0.75 and then to a 1. If they're not, the NASDAQ can get the sector rotation score to a 0.5 and keep it there forever with no help from small caps. It'll never get higher than 0.5 unless small caps participate. Yes? Okay. So they're like a seasoning. You're like, oh, that's an interesting taste. I like that. Is it still delicious without that? Yes. And we think that. And we're like, oh, this is plenty delicious as is. You want to put some small cap sprinkle on there too? Even better. Okay. Who's at the bottom? Materials, energy, healthcare, staples. This is favorable from this perspective, right? This is what we would expect. So just to kind of give you a sense of what we're seeing right here is kind of what we start to see here when things are like starting to move into like, there's our growth stocks and there's our defensive stocks. When we have bull markets, what do we think is going to happen? So as we see this start to play out where the growths orient to the top, that's why we score it the way we do, because we think there's a good chance this is coming. We like that. That adds fundamental strength to the score, and that just sort of props things up for us. Again, we're not like, oh, we're predicting that's right. That's what we think is going to happen there. Okay. 200. Let's go to 133. How's my time? I'm okay. Not great. Not great. Let me make sure I'm ready with my watch list here. Oh, I don't even have a pen. Oh, there I do. Okay, here we go. What's next? Communication services on top. But here we can see some remnants of the defensiveness. Utilities, staples, and then there's industrial. So it's kind of a mixed bag. We've got some growth. We've got some defensive. Discretionary's in there. Technology. Look at that technology chart. This is where we really see that. A month and a half ago, tech was at the bottom. Look in April. Look at that pink down there at the bottom. Whew, and then it comes whooshing in. Bam. All that. Where do we think we're going to see that next? So this is mixed, but we do still have more growth than not. When we get to 66, this is where we score. This is where it's important. What do we have? Industrials. What else do we have? And this is why our sector rotation is slow. Mine's a 0. Is it a 0 or did I get it to a 0.25? It's 0. But this is up long enough. Oh gosh, actually no, I'm going to leave it there. I was thinking maybe I would, but what I want you guys to notice, weigh in if you see it differently. Industrials is up there, but then we have utilities just kind of hanging on. And then we have staples. Technology has surged, but it's still just kind of sitting in the middle. There's discretionary in the middle, comm services middle. There's the market. That's how we know it's the middle, when you're close to that. So these are all middle. No, I'm going to leave mine. I thought maybe we would get it, but it's a no for me. I'm staying at a 0 on sector rotation. So there's probably my biggest concern is my biggest concern is we're not seeing the growth move into a leading position here, right? Steven, Steven, we're out of sync, man. Remember, I'm not going to score the 22-day. Ever. I don't score the 22-day. What is the 22-day for? Breaking ties. Breaking ties. So if I get to the 66 and I'm like, maybe I'm going to raise it. Maybe I'm not. I'm on the fence. Then I move to the 22. Right? Then I move to the 22. And then the 22 is going to tell me yes or no. So if I have it, if it's got the extra growth there, then it's like, okay, good. Now we can push it. There's Steven, there's no tie for me, right? I'm not tied here. This is not, you're kind of conflating where we're like, let's give it a 1/4 point. That's price action. The 22 has no bearing other than breaking ties, unless you've changed it. Like if you've changed it and you're like, I think it's better to do it this way. Okay, fair enough. Then yours is a different system and our scores will be different, which is okay. Right? And you just kind of want to keep track of it in that regard. But so for me, what's on top? I have one growth sector on top. Then I have a defensive sector. Then I have another defensive sector. And that's it. I'm not scoring the order of these. I'm scoring who's leading. Red is the market. Everybody else is here. These aren't really doing anything. So why are we scoring them? There's no score there. I'm only really looking at the leaders. Unchanged for me. Unchanged. And you can see, like, we're just not. This is the slowest one. Everything else looks pretty good. We're at least it's got half of it, 1.25 now. This is a little slow. Let's go finish with the VIX. Yeah. And again, I want to maintain it in this regard because it has to be a consistent process. I can't think a year later I'm going to do it this way because now right? I have to maintain this consistency with the process in order for the process to have the validity and the ability to improve and be measured. And right, I don't, if I find that I'm scoring the market I want or the market I think it might, I don't want my bias to lean me to like, well, I think there may be tariffs, so I'm going to score it. Once that thought ekes in, it's compromised the process. It's tainted it. Right? This is about what do you see? Psst, and stop. What do you see? Not what news is coming out. We haven't talked about the economic calendar. We do talk about the fact that there is news going on. Obviously, we're not, naive to that fact. But at the end of the day, we score what we see so that we don't let our opinions come in. That's the whole point of this process. Is at the end of the day, what the hell do I know? Not as much as the institutions. That's for damn sure. So whatever I know or don't know, I'm gonna make sure that I want this process to be representative of the market and not me. So hopefully that makes sense. Nope, I don't want VIX in. I want just VIX. Just the VIX. 1, 2, 3, 4, 5. So let's get where we were. This is the end of last week. We're coming into this at a 0.25 unchanged for the last 2 weeks. Oh, okay. So we got down here. Let's just kind of map this out. We had a lower high right there. Oh, it was a great trend there. Then we had another one right there. Another move. Lower high. Lower high. All coming off of this. If you remember, when we were back in this, I tried to describe what this de-escalation looks and feels like. Now that you see it and you look back, you're like, oh, yeah, I see it. I'm with you. What do we have then? If this was the last high, what is this as this turns over? Bam. Lower high. Lower high. Great. Perfect. What's the concern? Anybody want to flag a concern from this analysis going into next week? We just scored it better. Our score is going to improve. I am going to get that 3.25 I was thinking I would. Okay. What is my concern? Gold star if anyone wants to call it out. What might happen on this? Remember, this is the fear index. Institutional fear index. Right now, the fear is de-escalating. Great. Our favorite area for the VIX to do is live between 12 and 16 and pop up to 20, 22 when it's bad. We're not there yet, right? We haven't gotten down into this area out here. My concern is if this thing pops from here, this is going to turn. That becomes a low. If this is our last low, what is the orientation of this low relative to the last low? Higher. Yep. Higher low, Stephen. Exactly. A higher low is for me like the hedge signal. It's the ding, 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 ding. That alarm's going off, like, and it just keeps going off until that hedge is put on. That alarm's going off. Ring, 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 ring. That alarm means I should be tightening stops, taking profits if they're there, taking losses. I should be right. So if Steven's right and we come into Monday and we have some negativity and it closes that way. I mean, if it gaps down on, and this could be what we see tomorrow. If it gaps down, we'll have bullish trades on and we're going to have to, I'm going to pull my stops if they're going to get hit. I'm going to pull my stops and I'm going to wait. I'm going to wait for at least the first 20 minutes. Then I'm going to, if it's still down, work my way out and I'll get a better price than if I would have stopped out on the open. Hopefully it opens and recovers, which is what we've seen a lot of times recently. and it either recovers enough that I can pare down my loss later in the day, or recovers enough that I'm like, you know what? Actually, it's still good. I don't want to have to take the loss. I think the conditions are starting to more and more warrant, like, hey, let's give it a chance. Let's see what happens. The more bullish I am, the less willing I am to take losses. I don't want to, because nothing worse than taking a loss and then a week later you're like, oh shit, there it is, right where I thought. Let me know if this makes sense. So my VIX alert system is on high alert for next week. I'd really love to see this thing get all the way back down to, I think my number is around 1715 to 1725. If we can get back there, we were at 1850. It was not far. If we can get down and touch that, then it sort of resets that automatic trigger. There's always a good case to be made for hedging when you have a low VIX. I'll tell you that. So if you're new to the group, we very much incorporate the VIX on a daily basis. So hopefully this helps. I mean, it's interesting, right? Because I'm going to erase everything. From a scoring standpoint, it got better. I'm at a 0.5. There's my 3.4. I'm solidly mildly bullish. Solidly mildly bullish at 3.25. It's continuing to improve. Right? When you look at our improvement here and then you say, hey, May was one of the best, we're not shocked by that. And remember, we trade the momentum right? The surging of the numbers as much as we trade the number itself. So I feel like we've done fairly well here over the last little bit. In some trades that are a bit dodgy now, as the British would say, a bit dodgy. Improving, just not as fast. 2.0. Okay, I'm a 3.25. Steven's a 2.0. Where are you at? Let's get to the watch list. I got to go fast on the watch list. I have 2 things that I'm going to do. 3 things I'm going to do. Oh, man, I was slow today, you guys. Number 1, economic calendar. It's employment week. So we've got, if you have to go, I get it. The watch list, the focus list will be in the email. So if you start dropping, I'm not going to be offended. If you drop earlier, I always get offended. You guys know the rules. But when I go to the end, we do have Goolsby next week. I'm always excited about that. We've got the Bayes book. Well, it's an employment. So we've got job openings. We've got ADP. ADP is expecting to uptick. They're expecting to uptick. We're expecting jobless claims, and then the unemployment is expected to drop, but still at a maintenance level, 125. We're going to be paying attention to this. This is something the Fed's going to be obviously paying attention to. Okay. Trading plan section this week is risk management. I keep saying routines. We just finished with your rules. Now, obviously, rules will incorporate this, but this is from a portfolio heat. How much trade risk? How many number of trades? How will you adjust that? How are you going to correlate risk to market posture? What are your tsunami indicators for hedging? Thanks, Sandy. Good to see you. See you tomorrow. For hedging, we just talked about the VIX is mine. And the last thing you want to define in this section is, when would you take a break? A drawdown? Number of losing trades? Or if you just simply recognize you're out of your flow. Remember, and if you're new, this is helpful. But make sure you go into Circle. There are forms, documents. There are video series. We have one about trading plans. There's a trading plan outline you can download. There's a trading plan that's fully fleshed out that you can use as a template to guide and get some ideas, etc., etc. Let's get to the watch list. I'm actually going to just use last week's and cross off the ones I'm not going to keep. How about that? I think we still like pretty much everything. It's going to be fast. Apple, no. Apple's channeling at best and struggling to get to the top of the channel. It's a no for me. AbbVie still is a yes. It hiccuped, and it seems like it's trying to recover. Amazon is still in the hiccup. That's still a yes for me. Let's see. Whoops. APH was on our list. We had kind of a big volatile entry, which had me sort of hesitate. It's still moving. The hard thing is you're like, oh, we missed that one, but from here, it really has only moved a little bit. I'm okay with that. I'll keep it on my list though, because I still want to keep an eye on it. Bank of America is still anything that's on a hiccup. What do I mean when I say a hiccup? I mean we got a bullish move up, new high, pulled back, higher low, and then it's paused since the higher low. Right? The market posture continues to suggest increasing bullishness, nascent bullishness, but tariffs, an ascent in bullishness. But tariffs actions and reactions continue to get in the way, oft causing bullish trade stop outs or bigger frustration drawdowns. How does one properly trade this? Honestly, I mean, I feel like, there have been a couple of times, but the biggest thing is just simply watching your stops. Like right now, the trades that I'm in, they're not going right yet, but they're not wrong. The buyers have paused, but the sellers have not come in. Not that I took this one, but I'm just saying like anything that looks like this. And even if it were to do something like this, you're still like, there's support, right? And you can see what happens is sometimes when we find a support level and we pop up, it doesn't take long before it does something like this, and then it goes, right? So it's like this. You got to be careful for these little hiccups that we're not like, we bail on the trade. It's not wrong yet. And if I was in a worse market posture, I would bail. And if my market posture didn't increase, I would bail. But so far, that mechanism's been helping. Trades have been coming to fruition. So I'm going to keep going like this. And I think it's about being mindful on the stops, and especially around the entries. Of course, we're hoping we get some kind of positive news that kicks into this, and then all of a sudden this thing can move on up, and then it's like, there it is. Is that going to happen? I don't know. None of these are like, I have trades I'm carrying, but none of these are signaling new. I know a few people were like, what would make me? If any of these hiccups kick, what do I mean when I say kick? Kick out of it. Boom, boom. They kick out. Bullish kick. If they kick, it's on. Sienna was a little worse. But even Sienna never broke support. It got close. This one has earnings, though. You know what? I am going to take Sienna off my list. That's only one so far. CLS. I'm putting CLS on the list. Take one off, put one on. That looks fantastic right there. A little pullback, a little hammer. Maybe it pauses and then turns and bam. Signal. We're ready. I think looks fine. CME. Kevin, still in. He's riding. The rest of us got out back in this area here, I think. maybe the last day. I think Cisco still looks good. I didn't take Cisco. But Cisco is holding this support level, and if it kicks out of that support level, then I think we have a potential trade there. Yeah. I mean, I know that that's the thing about it. We either have to trade through it or decide not to trade, because we know what this administration is by way of like news and reaction. And it's like, if you wait for the reaction, it's already up 2-3% or down 2-3%. It's a tough condition. I said it's unique. Lot to learn. EA, no. Flex is still on my list. GE Vernova. Oh, I didn't have it on, but now it is. Starting to flag. I got to make sure I code the new ones. CLS. Let's put GEV in here. Gold kind of still in a hiccup position. Google still looks fine. Goldman still looks fine. Hilton, all hiccups. Nothing's broken. All of these are good. Howmet, yes. Still there. Now, if someone was a little tighter with their stop, they might have stopped. But this did not break support. It's down but not out. IWM. And if it goes out on Monday, then I take my loss and I move on, and that's it. It's actually been quite good before. There's room for that to pull back a little bit. MasterCard, I wished I would have taken. I can't remember. I was talking about either one of the MasterCard or Visa, and that one I do feel like I should be in, or alerted. I mean, rather. Meta looks fine. Holding up. This looks fine. We can't just trade and be like, oh, it's got to do exactly what I want when I want. We got to be ready to give it a few days of flexibility for hiccups potentially. If the buyers pause but the sellers don't take over, we're still okay, and we want to give it its potential. Microsoft higher. Netflix. It's bullish. I don't have it on my list. Nvidia looks good coming out of earnings. Anything in there is a trade window. So if it settles like this and then turns, bam, high or low. Palantir missed it. Nothing we can do. PM, still moving. PayPal. Roblox just won't give me another chance. That's my last one there. I want it again. Rivian. It's got to be soon. It's kind of holding there. It's got to be soon, or else that's a sell-off, not a pullback. Rocket Lab looks great. That's on the list. I'm thinking that one looks real strong for a potential trade this week. RTX kind of signaled. It's just a choppy one right now. SE still looks good. Setting up. Watch list looks strong. If it just hiccups and then turns, we're in a good place. We didn't lose any ground. If it breaks down this week, it's a whole different ballgame, right? Tesla still looks okay. TSM still looks okay. Twilio. I think our watch list still looks strong. Uber pulled back, but still sitting on the 50. There's Visa. A little bit rueful there. And there's Walmart. Okay, that's it. I will see you guys tomorrow morning. I'll put the list out. It's the same basic list. I added 2, took 1 off. We're carrying. We're looking to see, can we survive the hiccup and bounce and add to the current momentum, or are we going to break down and see this thing? Maybe our new range, which we see on the market posture, is somewhere between 2.5 and 3.5, and it sits in this. So maybe we hit 3.25, pull back a little bit. I don't know. We'll see what happens. It's good to see everyone. Enjoy the rest of your Sunday. I'll see you tomorrow morning, 9:15 a.m. Eastern time. As always, happy trading.
Recording